Ever wondered which fund performs better between QQQM and FSPGX? We will look at how they perform, as well as what better performing alternatives are out there at the end. QQQM, a relatively new kid on the block, has already made its mark. It's an exchange-traded fund that matches the performance of the NASDAQ 100 index. Despite its novelty, it tracks perfectly with the well-established QQQ, enabling us to delve deeper into its potential using QQQ's data. On the other hand, we have FSPGX, a mutual fund from Fidelity. FSPGX is similar to SCHG and VUG. Understanding the performance of these funds is crucial. It's not just about the numbers, it's about how they weather the highs and lows, their consistency, and their potential for future growth. Stay tuned to find out more about these two funds and their performances. Dive into the world of QQQM, a relatively new fund that perfectly tracks with QQQ. Now let's break down some numbers. The QQQM fund has an expense ratio of 0.15%, which is the yearly fee that all funds or ETFs charge their shareholders. It's important to note that a lower expense ratio could potentially lead to higher investment returns over time. Starting with a balance of $10,000, over time, QQQM has grown that investment to an end balance of $40,062. That's a significant increase. Its annualized return, considering the expense ratio, is an impressive 20.58%. Now, every investment has its highs and lows. QQQM's best year saw a return of 54.85%, while its worst year witnessed a drop of negative 32.58%. Its maximum drawdown, which is the largest single drop from peak to bottom, was also negative 32.58%. Let's talk about risk-adjusted returns. QQQM has a Sharpe Ratio of 0.95 and a Sortino Ratio of 1.56, indicating a good return given the risks taken. Lastly, its benchmark correlation is 0.92, showing a strong correlation with its benchmark index. As you can see, QQQM has had quite a performance, but how does it compare to FSPGX? Let's shift gears and delve into the specifics of FSPGX. The FSPGX is a fund that is known for its low expense ratio, coming in at just 0.035%. That's quite impressive, don't you think? It's like keeping more of your hard-earned money in your pocket. Starting with an initial balance of $10,000, this fund grew to a whopping $35,239. That's more than triple the initial investment. Its annualized return, or CAGR, stands at an impressive 18.51%. Now let's talk about volatility. The standard deviation for FSPGX is 18.63%, indicating a moderate level of risk associated with this fund. The best year for FSPGX saw a return of 42.77%, while the worst year recorded a loss of 29.17%. Maximum drawdown is a measure of the largest single drop from peak to bottom. For FSPGX, this was a drop of 30.68%. The Sharpe Ratio, which measures risk-adjusted performance, is 0.91 for FSPGX, while the Sortino Ratio, another risk-adjusted performance measure, is 1.46. Lastly, the benchmark correlation of FSPGX is 0.96, showing a high correlation with its benchmark index. Interesting, isn't it? But how do these two funds stack up against a benchmark like the SPDR S&P 500 ETF Trust? Now let's see how our funds compare to the SPDR S&P 500 ETF Trust, a benchmark for many investors. The SPDR S&P 500 ETF Trust has an expense ratio of 0.09%. If we had started with $10,000, we would be looking at an end balance of $26,696. The annualized return, also known as the compound annual growth rate (CAGR), is 14.16%. The fund's standard deviation, a measure of volatility, is 16.52%. Its best year saw growth of 31.22%, while the worst year experienced a decline of 18.17%. The maximum drawdown, which is the largest single drop from peak to bottom, was negative 23.93%. The Sharpe Ratio, a measure of risk-adjusted return, is 0.77, and the Sortino Ratio, which adjusts for negative volatility, is 1.18. The benchmark correlation, a measure of how closely the fund follows its benchmark, is 1. Now that we've compared all three, it's time for the final verdict. So, QQQM or FSPGX, Which one takes the crown? Let's wrap it up. QQQM, though relatively new, has shown a promising start. With a 20.58% annualized return and a Sharpe Ratio of 0.95, it offers significant potential for high returns. However, its maximum drawdown of negative 32.58% reflects its higher risk. On the other hand, FSPGX, with its low expense ratio of 0.035% and an annualized return of 18.51%, provides a slightly less volatile option. Its Sharpe Ratio of 0.91 suggests a slightly lower risk-adjusted return compared to QQQM. If you're looking for a slightly higher performing alternative to FSPGX, then SCHG might be an option. On the flip side, if you're looking for an even better alternative than QQQM, then a cheaper and less expensive option would be either VGT, the Vanguard technology, with an expense ratio of 0.1%, or FTech, Fidelity's equivalent technology fund, with an expense ratio 0.08%. Remember, investing is about understanding the risks and potential returns. Always make informed decisions. Until next time, happy investing.